This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And very good afternoon, everyone. Live on Bloomberg TV, Radio, YouTube, and Bloomberg Originals. It is Bloomberg Businessweek Daily. I'm Tim Stenovec. That is Sonali Basak. She's a Bloomberg News global finance correspondent. She is in for Carol Massar this afternoon. Sonali, it's good to have you here. Welcome.
Good to be next to you today.
You have been busy. You've been on air all day, whether it's real yield, whether it's open interest. The market reaction in terms of equities a little muted, but bond yields are lower. The dollar's lower. A lot of commentary around Chris Waller.
It's a totally interesting way to round out the week, isn't it? Because you had the S&P 500 hitting that $6,300 level, but it's been fluctuating around that. There's some softness. That weak reaction to Netflix's earnings is an interesting setup before we head into the Magnificent Seven next week. And yes, I agree with you. That bond yield in the shorter end of the curve being lower is especially interesting after not only the Waller comments, but a week of strong economic data.
This is all our focus over the next hour right here on Bloomberg Businessweek Daily on everything regarding that Christopher Waller interview and the Fed. Michael McKee is going to be joining us in just a few minutes. Also, talking about what's happening with the White House and with the Federal Reserve. We're going to focus on the White House. Jordan Fabian of our Bloomberg News team down in Washington, D.C. is going to be with us in just a few minutes as well. Also, on the company side of things, the CFO of Huntington Bancshares is back with us on earnings and just days after announcing an acquisition. That's going to bring it to the Texas market. All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Before I get to the markets, do want to begin with a developing story at JFK Airport affecting planes flying in and out of the airport. Right now, we have got what's described as an aircraft emergency. So departures from JFK are grounded because of that aircraft emergency. The FAA says the ground stop will be in effect until at least 2:30 with a medium 30 to 60% probability of an extension. So right now, again, a ground stop at JFK at least through 2:30. Keep it locked in to Bloomberg for the very latest on this developing story. U.S. equities, a lot of red on the screen right now as we wrap up the trading week. What a week it has been, but the S&P right now, little changed on this Friday. S&P down under 0.1%. We've got the Dow down 205, down 0.5%. NASDAQ Composite Index down 4, little change there, down less than 0.1%. Your 10-year 4.41% with the 2-year 3.85%. The 30-year, 4.98%. West Texas Intermediate crude oil down 0.4%, 67.26 a barrel. Spot gold up 0.4%, 33.53 the ounce. And as we wrap up crypto week, Bitcoin now at 117,613, a drop there of just about 1.6%. So again, repeating the JFK headline, we got departures out of JFK grounded because of a so-called aircraft emergency. That ground stop in effect until at least 2:30, according to the FAA, with a medium 30 to 60% probability of extension. Stay with Bloomberg for the latest on this developing story. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. And again, we'll bring you any updates to the situation at JFK if we do hear anything. Well, as we mentioned, Federal Reserve Governor Christopher Waller hinted he would dissent if his colleagues vote to hold interest rates steady at their July meeting. He's made his case for a rate cut to support the labor market. Waller said he thinks Fed officials should take the step if, quote, you make it very clear you think at this moment in time it is important to do. He spoke in a wide-ranging interview on Bloomberg TV this morning and talked about inflation expectations, especially as President Trump threatens the tenure of Fed Chair Jay Powell.
After the tariffs came on, everybody was worried about de-anchoring expectations, particularly after some of these Michigan surveys came out. But when I always look at the market-based expectation, because people have money in the game. Firms are making decisions on what their chief economists are saying. And if those things are wrong, they're going to lose a lot of money. So I've always paid more attention. I haven't seen much in the way of market expectations being unanchored in any ways you want to measure them, any forward look. Now, in the near term, of course, they might go up because you would see inflation in the short term. But in the longer term ones, I'm not seeing it. So either the market is just dismissing all of this as chatter and noise, Or at some point, if something happens such that it becomes much more serious, then you might see a discrete jump. And then, that's going to be a problem for everybody.
One of the questions that we get all the time, Chris, from people on Wall Street is, or one of the posits they make is that all this criticism of the Fed is hurting Fed credibility, and that the next chairman's going to have a tough job because there are going to be expectations for the next chairman set by the White House rather than by the economy. Do you feel that inside the building?
No, to be absolutely honest, we just do our job every day. I go in, I just focus on my work on monetary policy, payments, and oversight of the reserve banks. That's what I do. I let this stuff go and then just try to focus on my job. And I think that's how all of us are proceeding with this. I mean, at the end of the day, the president, whoever they choose, you're going to have somebody that has credibility with the markets, or you will see, as Jonathan was just talking about, you're going to see inflation expectations spike. You will not get lower interest rates. You will get higher interest rates. This is well known. We've seen this everywhere around the world when this happens. And I know Scott Bessent knows this. So this is not something that is lost on anybody.
Well, there you have it. That was Federal Reserve Governor Christopher Waller earlier on a Bloomberg surveillance. Michael McKee was part of the team that did that interview. You heard his voice right there. He's international economics and policy correspondent for Bloomberg TV and radio. When he did that interview this morning, he was in Victor, Idaho. Now he's just a few miles on the other side of the border over in Jackson, Wyoming. Mike, I want to stick on the credibility with the markets. That's the part that Governor Waller ended on right there. Obviously, Jerome Powell has credibility with the markets. Based on the reporting that you've done, the folks that you've spoken to, do the front runners to replace Fed Chair Jay Powell also have credibility with the markets?
Well, Jay Powell has a lot of credibility with the markets, and we've seen that in market reaction to when Donald Trump has threatened to fire him. The markets have essentially tanked. Chris Waller has a lot of credibility with the markets, and a lot of people say he might be Trump's best choice, especially when you consider what Waller was saying about how the market would react if they thought the Fed had lost credibility. Interest rates at the long end, which are the ones that matter for economic progress, would probably go up because there would be concerns about whether the Fed is easing too much. So at this point, there is credibility. The question is going to be who gets chosen and how are they seen? Are they seen as someone who is going to do the president's bidding, or they're going to follow the tradition of the Fed and do what's best for the economy?
Speaking of doing what's best for the Fed, I want to point out the most recent note by Neil Dutta over at Renaissance Macro, who has been weighing in a lot on this process. And in defense of Christopher Waller, in the idea of whether he would be, okay, so this is what he says first. Waller is bending the knee to Trump, or that he's losing respect in the process. Neil Dutta is knocking down that thought. And he's saying, who isn't losing respect in this process? Importantly, what Waller says will be taken seriously by the people around the FOMC table, and many of those people are not in contention to lead the Fed and already agree with the premise of his argument. Okay, so what do you think about that, Mike? The idea that there are more people around the table who agree with this idea that perhaps the economy is not as strong as the White House might be claiming.
I think everybody at the Fed feels that way. We heard it from Mary Daly in our interview with her yesterday. She sees the economy weakening. Now, she's not signed on to the July rate cut, but she does think they're going to have to cut rates going forward this year because the labor market, as Chris Waller said, is getting a little bit weaker. And as far as bending the knee, there's no question that Kevin Hassett and perhaps a Scott Bessent have done that in arguing in favor of the president's economic plans. A little bit less so with Kevin Warsh, although he's a longtime Trump confidant. Chris Waller hasn't been seen as a Trump person. And I think what he wanted to do in his speech last night and in his interview with us is make a solid economic case for why he would cut interest rates in July, which I think he did. Now, the question is, do you think if you don't cut rates, the economy gets a lot worse, a lot faster? That's the nut question that will come up on July 30th for the members of the Open Market Committee. But I think what Waller was doing was demonstrating that he is not bending the knee, that he's looking at the economics of it, even if it appears he's supporting Donald Trump's ideas. And of course, it's going to be a little tricky for Waller when it comes to July 30th, because the question will be, how committed is he? Would he actually dissent if the majority votes another way?
You know, he spent a lot of time in that interview, Mike, talking about the importance of having conversations around this stuff and trying to bring other folks who are part of the FOMC and at least voting members of the FOMC over to your side, present the evidence, show the economic argument why you think rates should move one way or another if you do believe they should move. Given what you heard from the Fed governor, do you think that July's meeting is a live meeting?
I don't think so, for the reason that we have heard from most voting members of the FOMC up to today, and the blackout starts after today. They can't talk until after the Fed meeting. And there's only two, Waller and Vice Chair Bowman, who have suggested a cut at the July meeting. It may be that others feel that way, and we might see something in the minutes about people feeling that they could go either way. But at this point, they've led the markets to believe there won't be a cut, and they don't like to shock the markets, and that's what would happen if they did cut rates. And it's unpredictable what happens in the markets when something like that happens. So I don't think that it's really a live meeting, but the minutes will be very interesting.
Beyond the meeting itself, beyond the minutes, behind the economic data, how do you gauge the impact the uncertainty around the next Fed chair is going to have on the bond market? We've talked about this a lot earlier this week, the idea that the term premium could be higher at the longer end of the yield curve, which is exactly what the Treasury Secretary doesn't want. So how do they resolve this uncertainty when the president keeps on weighing in criticizing Fed Chair Powell?
Well, you know, Chris Waller was essentially asked that question, and he said he thinks Scott Bessent knows all about this, and that he will recommend to the president that he not do anything that would upset the bond market. Certainly, there are people he could appoint that would send the markets, send bond prices falling rapidly and yields rising, especially from the belly on out. So that is something that at least the people who are paying attention to the economy and who understand the bond market in the administration will have to keep in mind as they get close to a presidential nomination.
Michael McKee, international economics and policy correspondent for Bloomberg TV and radio, joining us from Jackson, Wyoming. Mike, safe travels as you make your way back to the East Coast. Thanks for taking the time this afternoon. I do want to update everybody on a headline that we are following. That ground stop at JFK has been canceled. That's according to the FAA. Just to update everybody, there was a ground stop. Departures were grounded due to an aircraft emergency. The ground stop probability of extension was 30 to 60%. We reported that earlier. The FAA reporting that JFK ground stop has been canceled. Let's go to Washington, D.C. now and bring in Jordan Fabian. He's Bloomberg News White House editor. He's at our Washington, D.C. bureau. Jordan, I want to start with one of the most read stories on the terminal. You wrote it. It's about President Trump authorizing the Justice Department to seek the release of grand jury testimony from the prosecution of Jeffrey Epstein. It comes after the Justice Department and FBI last week, though, said that Epstein did not keep a client list and that no more files related to the case would be made public. Is it fair to call this some sort of about face?
It's certainly an effort to appease his supporters who are angry with his handling of the Epstein case. But I will note that this move falls short of the level of disclosure that his supporters have demanded, including some members of Congress. They want witness testimony, they want client lists, they want FBI interview records, etc. And this would be a more limited slice of those records, referring to the grand jury testimony. On top of that, the Trump administration has to go to a federal court to ask them to unseal those records. Remember that grand jury testimony is usually kept secret. And so this is not maybe going to see the light of day for a while, if ever. And so maybe a way to appease them now, but it certainly falls short of everything his supporters have asked for.
You know, you talk about it, it's not just his supporters. I've seen clips of the vice president, for example, on podcasts calling for the release of the Epstein files ahead of the election. I'm wondering politically where this is going right now, who's getting behind the president and who in the MAGA universe is saying, wait a second, there is more here that we want to see.
You're seeing the Trump's inner circle in the White House and Congress rally around him, but there are significant cracks, including House Speaker Mike Johnson, who's called for more transparency here in a rare moment of dissonance with President Trump. There's also those outside conservative influencers and podcast hosts that helped propel Donald Trump to the presidency last year and were really excited by the prospect of him releasing files about Jeffrey Epstein, but also the MLK assassination, the JFK assassination. And those folks have really been discouraged by his handling of this matter. And so you're seeing this rift widen as Trump kind of holds out on mass disclosure here.
Now, the move that we're discussing now came after the Wall Street Journal published a report alleging that President Trump once sent a suggested birthday letter to Epstein, to which the president said the letter was fake. In a social media post, he had threatened to sue the paper, its parent company, and owner Rupert Murdoch. How is the Wall Street Journal report resonating in Washington, Jordan?
It certainly caught a lot of attention, and it clearly rattled the president, given his bellicose response to that report. And that's because it, again, drew attention to his past relationship with Jeffrey Epstein. We had this weird situation where you have the president and his supporters last year agitating for the release of the Epstein files, kind of spinning conspiracy theories that a lot of important people were part of his his inner circle and were perhaps participating in illegal activities. Where if the president is on tape and on camera, partying with Jeffrey Epstein at his estate in Mar-a-Lago in the 1990s. And so you had this weird situation, and that Wall Street Journal report kind of put that back in front of people's minds as he struggles through this controversy. We should note, too, that the paper declined to comment on the president's litigation threat. Hey, I just wanted to, in the last minute or so that we have with you, Jordan, get an update from you on something that was reported yesterday. The president was diagnosed with chronic venous insufficiency after experiencing leg swelling, though physicians said he's in, quote, excellent health. This is coming from the White House on Thursday. How rare was it for the White House press secretary to sort of acknowledge something not great about the president's health, or is this an okay diagnosis? What can you tell us? The top line is it is unusual for this White House to be that transparent about the president's health. At the same time, this condition, as they described it, is a fairly common condition. It affects 1 in 20 U.S. adults. It's especially common in those over the age of 70. And so, but at the same time, it was interesting because that highlighted, the president's age coming after a campaign where he hammered his predecessor, Joe Biden, over his age and fitness. And so, I think the White House was especially, cognizant that there were photos out there showing bruising on the president's hand, swelling in his ankles. And so at the same time, they're trying to put that story to rest, saying it's not a major health issue, but it does raise attention to the fact that the president is 79 years old, the oldest man ever to be inaugurated, and time's only ticking. Jordan, Fabian, appreciate you taking the time this afternoon, joining us from Washington, D.C. Bloomberg News White House editor Jordan Fabian there. Check out his reporting and the entire White House team's reporting at Bloomberg.com and on the Bloomberg terminal. Once again, repeating a headline that just recently crossed the Bloomberg terminal, the JFK Airport ground stop has been canceled, according to the FAA. A previously issued ground stop at John F. Kennedy International Airport in Queens, New York, has been canceled. That ground stop was due to an aircraft emergency. Coming up next on Bloomberg Businessweek Daily, Huntington Bank shares lower, even though the company boosted its net interest income growth forecast for the year. We got the CFO next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Bond yields fell alongside the dollar as Fed Governor Christopher Waller reiterated his case for a July rate cut. His remarks coming in an interview with Bloomberg Television and Radio. Right now we have got the Dow, the S&P, NASDAQ all in the red. 5-point drop on the S&P. Little change. That perhaps the key takeaway, down 0.1%, retreating from a record now at 62.92. The Dow down 200. 101, down 0.5%. NASDAQ flat on the day right now. Lower, little change, down just 6 points. Our Mag 7 index, though, ahead of earnings next week out of Tesla and Alphabet. The Mag 7 index up now by 0.6%. 10-year 4.41%, with the 2-year 3.86%, the 30-year 4.98%. Gold up 0.4%, 33.51 the ounce, and West Texas Intermediate crude oil WTI down 0.3%, 67.34 for a barrel of WTI. Chevron won its arbitration battle with ExxonMobil, clearing the way for it to buy Hess Corp in a more than 20 months after that $53 billion deal was announced. Chevron shares lower now by 1.6%. That ground stop at JFK is over. We do have more details on just what happened. JFK lifted the temporary ground stop put in place because of a disabled aircraft on the runway. The FAA put out an advisory saying it was halting departures for a brief period of time because of an aircraft emergency. We're learning that Delta Airlines Flight 183 landed safely at JFK after what is being described as a hydraulic issue. So again, repeating that ground stop, JFK International is over. Recapping, stocks lower, S&P down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, nice sigh of relief there after that ground stop. Thanks for that update, Charlie Pellet. Well, Huntington Bank shares stock down about 1.8% as we speak. The company reported second quarter earnings this morning. It boosted its net interest income growth forecast for the full year. Earlier this week, though, the company also agreed to buy Veritex Holdings for $1.9 billion in stock that expands its presence in Dallas, Fort Worth, and Houston. Back with us is Zach Wasserman, Chief Financial Officer of Huntington Bank Shares. It's the holding company of the consumer and business regional bank, Huntington National Bank. It's got locations in a handful of states, including Ohio, Minnesota, North and South Carolina, and more. Also with us, Bloomberg News senior editor Nina Trentmann. She writes the Bloomberg CFO Briefing newsletter, which you should sign up for at bloomberg.com/CFO-briefing. Zach is in Columbus, Nina here in our Bloomberg studio. Zach, I want to start just with the deal for Veritex in Texas that will accelerate your operations in the state. What attracted you to this bank in particular and to the Texas market?
You know, we're extraordinarily pleased with the opportunity to partner with Veritex. And, you know, a couple things I would say. One is the Texas market in particular is incredibly attractive. As you probably know, it's one of the fastest growing states in the country. It's the 8th largest economy in the world if it was a standalone country. And just the dynamism and the amount of business activity there is incredibly attractive. It's one of the reasons why we launched our own business there more than a decade ago, and we doubled down with a local expansion in early 2024. But Veritex also is an incredible platform for us to partner with. They're a top 10 commercial bank in the state, and in particular focused on the two cities, as you noted before, the two MSA areas, Dallas, Fort Worth on one hand, and then Houston on the other hand, that we really are focused on. So we not only see a great opportunity to combine our activities, but to really build on that. One of the things we've talked a lot about is that this is a springboard for us to grow organically, not only now in the short term, but really over the longer term in Texas. It'll make Texas our 3rd largest state, to give you a sense. So we already will have a very meaningful presence in that really great market.
Zach, can you talk to us a little bit about how that deal came together? We know, of course, many companies have been looking at deal making this year. Deal making is actually up compared to the prior year period. But still, of course, there are deals that are not going through because of tariffs and uncertainty. And how far did that impact your deal? And also, how did it come together?
Yeah, well, you know, so we have wanted to expand and sort of continue to grow into Texas for some time, and we've been therefore evaluating a lot of opportunities to do that, both organically. You know, as you probably know, in North and South Carolina, we've just announced a pretty significant organic expansion, building 55 branches and really doubling down, building out our whole franchise there. And so we were looking at opportunities to do the same thing in Texas, and obviously evaluating lots of different ways to do that when we really began to talk with Veritex. And it came together pretty quickly. The first time we met with them to discuss a partnership in any specificity was in mid-June, so just about a month ago. And it evolved quickly for us to see, wow, these are not only incredibly strategic opportunities, but the organizations themselves share a tremendous affinity in terms of culture and mission, which, as you probably know, that is the sort of secret sauce to make an acquisition in banking successful. The cultures need to be aligned. The teams need to work together. And when we saw that there was not only the strategic opportunity, but the cultures fit, and then we were able to work together to find some of these growth opportunities that we could capture together, we said, wow, this is a partnership that we really should move forward with. And so on Monday, we were really, really pleased to be able to announce that.
Just turning to your earnings, talk to us a bit about the past quarter. We spoke to you at the end of the last quarter, and we're asking you, do you see any signs of a recession in your business? How is your business doing? What are you hearing from clients? Now that we're 3 months later, how does that look?
Yeah, I mean, Q2 results were just phenomenal, and they really built strength throughout the quarter. To give you a sense, loans sequentially grew just under 2%. That's 8% year over year. That was at the high end of our guidance range that we had given earlier in the quarter. Deposits grew 1%. Fees were up 7% year on year. Spread revenue 12%. Ultimately, we saw pre-tax earnings up 16% and earnings per share growing 25% year on year. So it really was a bang-up quarter. I will tell you, if you rewind the tape and you go back to April, I would have told you we had a lot of momentum. We felt pretty confident about how things would go, but there was clearly quite a bit of uncertainty in the market, and the capital markets were pretty volatile. Fast forward to June, and we saw strength build throughout the quarter. Loan and customer activity really firmed up, particularly in mid-May and into June. And now the third quarter is starting out with a bang. We just talked this morning with our analyst and investor community, and we shared that through the first couple of weeks here in July, it's pretty strong, actually. So all signs are pointing toward continued growth and certainly a very encouraging end of what was, to start with, a somewhat uncertain environment.
Zach, Sonali Basak here. Thanks for joining us today. Even with a lot of promising information coming out of this earnings season for the biggest banks, for the regional banks, there seems to have been a pretty muted investor reception for firms even like yours that have boosted net interest income guidance. That should be a really good thing. What are investors telling you in terms of what else they want to see, why the muted reaction, even if things are looking pretty good?
It's hard to know what's on the mind of investors at any given time, as I'm sure you know well. Look, I think if you take a step back, the regional bank stocks have expanded a fair amount over the last month. So I think there's part of that sort of profit-taking activity going on now as results come through. There's also obviously worries around how will different banks fare under this fairly wide cone of uncertainty around where interest rates are going to go from here. Are rates going to stay flat? And could they even go higher, or could they go lower? I'll tell you, for Huntington's sake, we have positioned the business to be pretty neutral and to effectively have the same outcome if we have 0 rate cuts or as many as 4 rate cuts from here. And so I think that's one of the questions on the mind of analysts. I think another one is, as loan growth in the banking industry generally starts to pick up, which, by the way, is an incredibly healthy sign. But as it happens across the industry broadly, what will that do to deposit cost competition and the benefits of interest rates coming down by around a percentage point relative to the peak of Fed funds, over the last number of quarters here. So I suspect those and many other things are on the mind of analysts. For our part, I'll tell you, we put our heads down and we run the business. And I think, for what we believe pretty strongly is if we can keep posting that, teens to higher earnings per share growth and revenue growth in the high single digits, that ultimately we'll see the stock prices continue to expand as they have been for the last several months.
Zach, you talked about interest rates, which of course is a nice segue to our next question. We've seen an increasingly intense debate this week and in recent weeks about the future of Mr. Powell as head of the Fed, with the Trump administration asking for rate cuts, wanting to remove him. We saw this big excitement earlier this week when the New York Times reported that Trump had written a letter and waved that in front of people in Congress. I'm just wondering, for you as a regional bank CFO, I know that your peers on Wall Street have expressed their support for an independent Fed earlier this week when they reported earnings. For you as a regional bank CFO, how does that look?
What we want is a well-functioning monetary system. We want a predictable and stable environment. We want to understand that it's a fact-based and based on the kind of fundamentals of the economy in terms of how the decision-making is happening. So far, that appears to be happening. I personally give the Fed a lot of credit. It was a very difficult environment they've been through, and they seem to have managed through over the last several years pretty well here. That'll be where our focus is. Fundamentally coming back, we run the business every day. We take the interest rate as given, and we try to optimize around that, Nina.
We're speaking with Zach Wasserman, Chief Financial Officer of Huntington Bancshares. Zach, since you do operate in these geographies, including Texas, Ohio, Minnesota, North and South Carolina, and more, you've got a nice regional view on where there's strength and weakness. Are you seeing any particular geographical weakness emerge anywhere?
Really not. I think pretty broad-based growth. One of the things we shared today in the earnings results is that, like we've seen for the last several quarters, the growth we're seeing is very balanced between what we're calling our core, all of the businesses we've been operating for a long time, but also our new initiatives. Excuse me. The launches we're doing into North and South Carolina, into Texas. Recently, we launched our business into South Florida, and a number of new commercial specialties, and we're seeing a nice balance across them. So, kind of across our traditional Midwest footprint, we're seeing strong growth in Michigan. I was just up with our Michigan-based team earlier this week, and we're seeing 6% year-over-year loan growth in that market, to give you a sense. In Columbus and in our central Ohio region where I'm based, we're seeing very strong economic conditions and a lot of expansion. And then, of course, in some of the new geographies that we're growing into, North and South Carolina, Texas, Florida, we're seeing a fair amount of expansion there also. So not really seeing any areas of weakness. And, again, as I noted, kind of the trend we're seeing month by month here is firming up pretty well.
Zach, thanks for joining us. It's good to see you again. Happy third quarter. I can't believe we're already there. Hope you have a good summer and do come back soon and join us once again. Zach Wasserman, Chief Financial Officer of Huntington Bancshares. It's the holding company of the Consumer and Business Regional Bank, Huntington National Bank. Locations include Ohio, Minnesota, North Carolina, and more. Stock right now down about 2%. The company did report results a little earlier in the day. Also with us, Bloomberg News senior editor Nina Trentmann. She does write the Bloomberg CFO Briefing newsletter. You should sign up for it at bloomberg.com/CFO Briefing. Taking a look at equity markets on this Friday afternoon, and we're actually turning red. The S&P 500 down about 0.1%. The Dow right now down 0.5 percentage point, while the NASDAQ is pretty much completely flat. Coming up next on Bloomberg Businessweek Daily, a check of the health of the housing market here in the United States. We're talking everything, including, yes, rates. Katie Hubbard of Walton Global next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks fluctuating between small gains and small losses as declines in tech and growth shares offset gains elsewhere. S&P 500 index still on track for a weekly advance after consumer sentiment rose to a 5-month high. Little change, the key takeaway at this hour, with the S&P down under 0.1%, down 5 points. The Dow down 213, drop there of 0.5%. NASDAQ Composite Index now flat on the day. Interestingly, the Mag 7 Index higher by 0.6%. Next week, we will be hearing from both Alphabet and also from Tesla. 10-year, 4.42%. The 2-year, 3.87%. The 30-year, 4.99%. Gold up $13 the ounce, $33.52. That is an advance of 0.4%. West Texas Intermediate crude down 2.10, $67.42 a barrel. And Bitcoin down 1.5%, 117,650 on a Bitcoin. Sarepta Therapeutic shares are plunging by 37%. The FDA plans to ask Sarepta to pause shipments of its Elevidys treatment after 3 deaths were linked to the company's gene therapies. Again, Sarepta right now down 36.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Appreciate the update, Charlie. Thank you. U.S. housing starts rebounded in June on the strength of multifamily building, while weakness in the larger single-family market pointed to some ongoing struggles with bloated inventories and affordability constraints. New residential construction increased 4.6% to an annualized rate of 1.32 million homes last month. It's picking up after an almost 10% slide in May. That's according to government figures that were released earlier today. Our next guest watches all aspects of the housing market. Great to have back with us Katie Hubbard, Executive Vice President of Capital Markets at Walton Global. It's the privately owned asset and real estate investment company. It's got over $4.5 billion of land assets under management and administration, and more than 80,000 acres under management and administration. Walton Global is in retail, industrial, commercial, and more. Katie joins us from Denver this afternoon. Katie, you were last on with us just about a month ago. Is the residential housing market now better, worse, or no different than it was then?
Hey, Tim, thanks so much for having me. I would say the housing market machine is definitely gummed up right now, and it is continuing to flatline, with the increased housing prices going up 60% from 2019 to 2024, and mortgage rates doubling over the same time. It's just affordability is keeping really everybody stuck.
What do you make of mortgage rates going forward? If you have a 10-year yield that has been pretty sticky, we have reached roughly 4.5% again this week, although we are below that level right now. What does it mean for the potential for mortgage rates to eventually go down? A lot of people think it will be the Fed that could help, but if longer-term rates stay sticky, then is there a chance that mortgage rates just don't follow on the path lower?
That is really the challenge. And so we obviously are hearing President Trump wanting to send rates down. However, the 30-year fixed rate mortgage sitting at rate 6.7 right now is tied to the 10-year Treasury more closely than the Fed funds rate, typically sitting 150 to 170 basis points spread. However, when the market perceives the risk for long-term debt to be greater, the spread increases. And so we really need the 10-year Treasury to come down. Right now, if you're looking at technical analysis, it is channelizing. So it is looking to make a move. Hopefully that move is going to be to the downside, bringing rates down. And really, that's going to be the biggest driver, I would say, for how we get the housing market unstuck. Even with the big, beautiful bill that was just passed, we saw home builder sentiment increase slightly because there are some tax incentives that are going to be helping out in housing, but it definitely isn't going to do as much as it would if we could bring the 30-year fix down.
What is your view on the Federal Reserve's role in this gumming up? And the reason I ask is because of a post that the president made to his Truth Social platform earlier today. Here's partly what it said. He said, too late, which is a nickname he uses for Fed Chair Jay Powell, and the Fed are choking out the housing market with their high rate, making it difficult for people, especially the young, to buy a house. He is truly one of my worst appointments. Is the Fed partly gumming up the market?
I mean, like I said, the Fed funds rate doesn't directly impact. It does, work in lockstep with the 30-year fixed rate. So I would say what the positive that we're seeing in housing is that at the state and local level, we are starting to see some reduced regulation to help with affordable housing, changing zoning laws. For example, Governor Newsom just changed the CEQA Act, which was enacted in 1970. So he's saying it's the biggest reform California is going to see in over 50 years, which is going to enable developers to have less red tape, making it easier to develop in urban areas that have less than 20 acres. So not having to go through all of the environmental red tape that they had to, and making it faster and cheaper, because historically in California, it's really been a rich man's game to develop. And now people that have just written off development there are going to be taking another look. And so hopefully that and things like that at the state and local level are going to be able to help with the affordability, while, President Trump's comments on the Fed, even if we do bring the Fed funds rate down 3%, like he, tweeted a few days ago, that means we're probably going to be, in a recession at that time. So there's going to be bigger economic waves and impacts that come along with bringing the rate down.
Of the potential headwinds moving forward, and there could be many when it comes to construction and when it comes to just the creation and proliferation of new homes in this country, one question I have is actually around tariffs still, because you have those Section 232 tariffs still very much up in the air in a lot of ways, particularly with a lot of the housing inputs like lumber in particular. Meanwhile, there's still a big question mark around how some of the immigration policies could impact the labor market when it comes to housing construction. How do you weigh those factors when you're thinking about new home starts in the next year?
Yeah, Sonali, what's really interesting is that Walton's home builder clients, which we work with mostly publicly traded home builders, they are reporting no increase in costs across the board. In fact, in some cases, they're reporting their costs to have come down even since the talk of tariffs. So we're definitely looking out for labor because of deportation issues. So places like California, they might be reducing regulations, but they could have labor shortages. So we have not seen the impact of tariffs from our clients. They're not reporting that. And what's interesting is that publicly traded building supply companies are still operating at near 30% gross margins, while home builders peaked at about 27% gross margins in Q2 of 2022, and they've reduced their gross margins 600 basis points. The building supply companies are still operating at that high gross margin. So what we think is going to happen is that there's really going to be a balance and a dance between, yes, the home builders are really eating into their margins to drive home prices down. They're buying down mortgage rates, offering incentives to keep people buying their homes. But they're going to be going back to their suppliers and saying like, hey, now it's time for you to eat into some of your margins so that we can keep the homes as affordable as possible. So Lennar is actually offering 13.3% incentives across the board to their home buyers. And in places where they dominate, like San Diego, they have 50% market share. They're offering upwards of $100,000 discount on an $800,000 house to just their strategy right now is pace over price.
So while that's good news to see a very muted impact on tariffs so far for the home builders, one big problem is that some of the tariffs that have been proposed are not enacted. Lumber in particular. Of course, they're not seeing yet the impact of the tariffs. We haven't seen the tariff yet. And so how are you starting to calculate what future tariff rates could look like on the impact of these home builders, given that there's still so much up in the air? Is there a potential for the industry to be shouting louder about this if they think it's going to create an impact, unless they don't think it is?
Well, for lumber specifically, our clients are using lumber futures. So the lumber that they're going to be building with in 6 months is what they're pricing in today. And then also, the president has really discussed how to open up federal lands for milling lumber in the United States and adjusting taxes to make it more incentivized to have lumber from the United States. And we do have the ability. I was just coming from Portland, Oregon today, and that's a hot topic for them as well. So we're hoping, and we don't really think that the lumber tariffs are going to impact the home building industry as much. In addition, our clients are really trying to use new technology and ways to really reduce lumber and use alternative materials to reduce the dependency on that as well.
Hey, Katie, thanks so much for joining us on Bloomberg Businessweek. We got to run. Katie Hubbard, Executive Vice President of Capital Markets at Walton Global. It's the privately owned asset and real estate investment company. We are monitoring President Trump right now. He is speaking, he's participating in a signing ceremony for the Genius Act in the East Room of the White House. We'll bring you any comments as he does make them. Next on Business Week, Stocks on the Move.